we're doing a special. I'm sorry, but it's hot in here. Either that or my temper's rising. We're doing a special tonight kind of on the insanity of the economy. And I want to tell you who the real culprit is. The real culprit are the people that wanted to save us. The Fed, the Federal Reserve. They were supposed to save us. Well, even this all out. Well, this is what they do for a living. They create bubbles. Let me just take you through a few of the last few. We have the savings and loan, and they saved us. Oh, the 1980s led to the failure of 747 savings and loan institutions. The ultimate cost of the crisis estimate to have totaled about $160 billion. Okay? They rolled that. Save it. Save. They rolled that into the tech bubble. When this burst happened at the end of the 90s, the dot-com crash wiped out $5 trillion in market value of tech companies from March 2000 to October 2002. And then what did we do? We had September 11th, and we lowered. The Fed came in and lowered the interest rates. Our government said, buy. Go do your patriotic duty and spend. And we have the housing bubble. Now, let me show you exactly how this works. This is the way you create a bubble. You create the housing bubble like this. You start with problems. And so the government, the Fed, they come in and they say, here, you know what we're going to do? We're going to give you all kinds of stuff. Notice Barack Obama and George W. Bush are up. And these two guys, I'm telling you, our forefathers would have gotten a bucket of feathers. These four people now, they've been pushing and pushing and pushing. Hey, we're going to help. We're going to lower the standards at the banks. We're going to give loans to people who can't afford them. Banks had to find creative ways to make it all happen. Otherwise, they'd go out of business and pressure. And some of the banks were greedy. Standards were relaxed. No down payments, adjustable loans. Don't even need identification. Then I was on the air when these clowns were saying that. And I said, please, dear God, don't do this. Please. When the interest rates go up, you're not going to be able to afford the house. Well, guess what? They did. Unfavorable lending, boom, unqualified buyers. Fed had to increase the interest rates, and the homeowners all defaulted. Massive disclosures. It's not a scam. We were there. But yet we don't accept the blame. We have to push the blame someplace else, and never on the people that were responsible, the Fed and the politicians. No one forced us to get the loans that we couldn't afford. We did it. We're involved as well. We're just too tempted by the lure of a bigger house. There was no restraint. Please, America, can we have some restraint? Can we deserve the country that we have inherited? About 2 years ago, when people were just starting to find out about how the adjustable rate loans can be, I started warning about a final bubble that this government was going to create, and they're doing it. I called it the money bubble, but Nouriel Roubini calls it the asset bubble. We have David Buckner in. How are you, sir?
Good to see you.
Good to see you. First of all, did I get this right?
You did.
Okay.
You did.
David Buckner is from Columbia University, and you also are a Fortune 500 strategist and consultant and all of that. Okay. So tell me about the asset bubble. It's the same. It's the same
process as this, but you recognize that we had a problem. The government started borrowing. Now, the government's been borrowing for a long time. That's not uncommon. But the level that we're at, $38,000 per man, woman, and child in America.
Hang on, just let me say, because we borrowed back on the other side of the board, okay, and we couldn't afford it, they absorbed it.
They're the backstop.
Right, but they couldn't afford it, and so now they're having to borrow money.
They're going to China, they're going to other countries to borrow.
Okay.
So now they're going beyond borrowing. They're going into
to cover this.
To cover this. And with that borrowing, the Fed's lowering the interest rates. And there's a little interesting thing is happening here. As the Fed is lowering interest rates, the government's coming around and saying, fine, we'll get the lower interest rate. And the Fed has an incentive to do so to protect the government. They are coordinating this. Unlike any other time in history where they have been separate entities, the government now is increasing spending on money borrowed that the Fed is providing.
Okay. Then what we have here, so we have this, the elected officials, They've pushed unfavorable lending. Here they're just pushing favorable lending for themselves to be able to get more money. We're an unqualified borrower, wouldn't you say?
Right.
The way we're borrowing.
Same cycle, same exact process.
Right. They've lowered the interest rates. We've borrowed more, so same part.
And by the way, investors are coming in now and doing the same thing. They're going, wait, if I can borrow at 0, if I can go overseas and invest at 5%, I am carrying over, it's called carry trade, I'm carrying over the opportunity to make money by doing nothing.
Because our dollar is losing value. You can get, if you take our dollar, borrow that dollar, cash it into sterling.
Or any kind of an asset. Sterling's a great example of it.
And then you can get, because that's going up, the dollar is going down, you actually...
And what I return is going to be worth a lot less. So I am making an asset increase by doing nothing.
Okay. Then we have inflation. That is coming at some point.
It's happening either way. If they raise taxes, it's inflation. If prices go up, it's inflation. It doesn't matter.
The Fed will then raise the interest rates.
They're going to have to. They're going to have to. He said yesterday, I don't see the future, and I don't see increasing interest rates for a season, for a year even. But the second they do, what happens? As soon as the free money is gone, you can't get it anymore. What happens to your assets? You're going to have to pay back that money.
I was going to say, if you borrowed it, it's exactly what happened to the...
You got to pay it back.
There's a difference. When we had the housing bubble, we had an orderly exit. We had these interest rates being reset
over a period of 5 years.
So we could say, holy cow, this one, the really bad borrowers are in trouble now. But in a year from now, we've got the next bubble that's going to burst. And in 2 years, we still haven't hit the...
People were saying, I smell some smoke.
Right.
And then a little bit more smoke. And then by the time they saw the fire, we were 2 years down the road. This, you won't see smoke. There will be a flame out.
Okay, is this why Bernanke came out yesterday and said, no, we're not worried about the falling dollar. We're not going to raise the interest rates, which is unusual, historic, is it not?
Because his job is to protect against inflation.
Correct, but it's also historic that he came out and said that.
He's now participating as a government spokesperson.
Right, and he's saying, don't worry about those interest rates going up, because once people fear the interest rates going up, this bubble bursts.
This bursts, and they run to the doors, but the number one player here is the government. They're going to be the first one out.
Everybody else is lost.
They're going to have to be second. And second's not good in a fire. They're going to have to be.
What's left after this? Did you hear our first guest?
Yeah. What's interesting there is bubbles are not uncommon. We have bubbles all the time.
Right.
But when the markets are playing against each other with the bubble, we call it equilibrium when they hit. When the government, that's supposed to be the judge and jury, is now playing as a player, you have no backstop. There isn't someone to turn to. There is no police officer to break up the battle. They're now throwing punches. So that's a problem.
So do you see a possibility of what he said was coming? Because what he said was coming was the dollar will collapse. You will be forced, and this is what I feel is happening, is we're going to be pushed. They're going to say, America's too big to fail. England is too big to fail. It's all too big to fail. We've got to push it up.
It'll be the same as the housing. Too big to fail. Citigroup, too big. It's going to be on a global basis. The question is, will China, will England, will Europe, will our trading partners actually believe at that time that we're too big to fail? They're trading into gold right now.
But aren't they going to be in the same situation?
They're going to feel the domino. But the question is will they let us go down because they've taken out of dollars and gone into gold?
America, there it is. Massive debt, massive government intervention. It is time for massive innovation. But the good news is that's what America does best. Next.